Now, this is setting up to be another one that I can do where, again, I can sell by market.
Actually, yeah,
And
you traded that one earlier, right? Yeah, you're smart enough to take profit right away because this is still like you trade against a previous uptrend.
where I'm
So it's
trading
a strong
against an uptrend,
uptrend.
but I know that I have a 100 moving average right here, and on the 1 minute time frame, I know that, see how it's going, it's breaking and going down. I know that right there is my take profit area, right around here, and it'll probably go right to that point. So again, this is something that, yeah, you're right. I'm cautious that it's on an uptrend, so I'm taking little profits as I get them. So on the 1 minute now that this is breaking, a little bit lower or higher, um, sometimes it needs to come back up and touch a moving average, and then we'll go, south now. But that's a pretty good setup.
And another thing, yeah,
So,
another thing is, even though you can make a trade, right? You see how choppy this is going down.
mm,
The price is not as smooth. Like
right,
that's the reason why I don't like to trade against a thriving. You have to
right.
wait until like a good confirmation and then you trade.
Yeah, I mean, I
And a
can,
1 minute chart, I don't
I can take these little, $30 dollar ones, and I'll see it come down probably right to here. But I mean, for me, it doesn't really. Uh, I know it's against the trend. We established that when we drew it. Sure, from here and from here. However, this is still going to touch this line. Um, Even that's the 20 minute.
right.
So it'll have a wick that is, even if I were to draw a fib from top to bottom, okay, it's still the 38, or that's right around the 50. So, I mean, yeah, I mean, that's about 50 right there, about 50% of the way down before it goes back up. Now, that's why I took little bits of profit. I would take a $70 one and a $30 one. I'm not in this to, be kind of cutesy with it. I'm in and out. Like I said, when I'm in positive land, I stay there very, very shortly, and I take it and I'm out. Um, that's when the other time when I was watching it with the USD CAD, it was hard to watch on the 4 hour, um, but it was uh, it was still interesting to see what the news come out. But I think keeping it just really simple and saying, all right, look, you've seen these all three of us have seen these a million times. These little go arounds, and if this breaks my channel, this is going to go down. Where is it going to go? And realize how I'm saying, where is it going to go? Where's my profit target? Where most people say, where's my stop loss? So most of my energy is talking about where my take profit is. I didn't spend much time talking about where my stop is. My stop clearly is if it went the other way, if it went above these. But I waited until I had at least a 5 minute candle open up down here and was across these two candles. So, that's all well and good. And so this will probably come down here and, touch this, or, or then maybe we'll come back up into the trend, or we'll continue down here, who knows. But I don't, after I've made money on it, and it goes down 50% of the Fibonacci level, I get out. Not get out, but I just, of course, I get out and I look at something else, more interesting. Like we were talking about oil. Again, DBO is the only stock where you can hold on to it. Let me just see 1 second. Tradingview.com, and I'll show you real quick. But so we haven't seen oil this low in a long time. You're both.
Yeah, but I would wait for a hook to come back, a visible hook, and then you catch it. You don't want to catch the earliest
Sure.
0% of the trend.
So
you want to catch 20% of it.
Right. So yeah. I mean, perfect case in point. New Zealand dollar. These indicators, fractals. You've probably seen them before.
Yep.
So on the monthly, this is something that one of our instructors, Christina, trades every night. Is just the New Zealand dollar, and it's something where eventually, when we could all agree that this is going to come up at some point. It's just when. And a lot of the pros, I would say 60%, I'm going to use the word majority of pros, like my first example with the dollar yen, will set up a long-term play. Meaning I may be, negative 3,000 or 4,000, but I want to make, a positive 8,000 off of it when it finally comes down. Because since 1993, it usually honors this line, and the Bank of Japan intervened, you have a nice trifecta. So, that's okay, Rena. So, so basically now when you look, so going back to the New Zealand dollar, that's a lot that you can make right there, right? That's like, where was my New Zealand dollar? Right there. So my point of this being, when there's a fractal under this, when I see a fractal come out like here, and I see another monthly candle going upwards, I'm going to play this thing up. And I'll play it up to the 200. And a 2.0, that could be a $20,000 trade. Even a 0.5, that could be a $4,500 trade, half of a standard. So,
did you see the pound yen or the dollar yen? I told you, if you got out fast, right, on that trade, you'll be smart. But you stay in, you're not. You see that it's choppy. I know that it's not gonna keep going down.
It may not. The point is, it doesn't matter to me. It's like, just to show you, it was just a random chart. I just pulled up a chart, and all we were looking for was a nice little break below the moving average. And when that happened, we cornered it off, and we waited for a break. And once it broke in that direction, it was kind of like a squeeze. So yeah, we said that right around this area was a good area to take profit, and so that's why, I took it, and then I'm done looking at it. It could go up, down, sideways. I have no, if this were to break below the 20 moving average going down, sure, I could play that down. But for right now, just to cover some of my bases here, we talked about, something like New Zealand dollar. Gold, is, I would rather play silver. Silver is something that is very respondent around 14. But the metals, I would stay away from right now. Um, going to trading view.
Metal is, yeah, stay away from it unless you want to hold your money there. That's okay.
Yeah, I mean, it depends how you want to. I mean, trading and investing are two different things. So now I just want to take a quick look at
Well,
two
I can't
things.
disagree though, but the thing is that a lot of people, like my brother, he doesn't study chart. The only thing he learned is from watching Mad Money from Jim Cramer. It's like, come on, man.
Yeah, I
Even though
mean, you
you
have to understand.
investing, you can't close to position trading.
Yeah, you have to
You
understand.
can't close to position trading, so
Right, you have to
you still
understand.
have to use the stop loss. It doesn't matter.
Well, right. I mean, listen, you have to understand that, people uh, like Kramer are entertainers, and and it's true. It's it's his job to entertain. He has bells and whistles going off and gongs and I don't know what It's not.
Man,
It's
don't get me
they're
started.
they're all entertainers. So we okay. We're looking at the VIX right now. And this is something that, hold on. Okay, looking at the VIX right now, and this is something that people all week have been asking me, about how to play this. And that's how you play it, by, taking that in real quick, buying calls, buy more calls if it's down here, buy puts, buy more puts if it's just keeping it really, really simple. But Dan, what happens if it hits 48 or 50? What do I do? Well, that's not unusual. I mean, it's happened a few times. If I go out to the monthly here, you'll see this line that I drew. It's come up to the 40s a few times since 1999. 2, 3, 4, 5. But what happens every time? Every single time it comes up to this line, what does it do? Goes right back down. Am I right?
Yep. Yep.
Every single time. So, this is something where not only do I buy as many puts as possible, but I'll buy them maybe for October. I bought some for September. So I know I have 60 days for it to go back to its normal trading range. This isn't a stock or anything, it just measures volatility. So its usual trading, when a usual average day is at 12 to 13. Now, whenever it spikes, that's when you have a lot of fear. When you have, worries about the Fed and the Dow going down 1,000 points, and the Greek Prime Minister just resigned, and it's like a trifecta for the VIX going up right there. So, will the VIX won't be able to stay up there. So it's something that is an inevitability. I believe that it's just a measure of, again, volatility, so it will most likely come down to 12. You could even buy the inverse of this. I think it's XIV. Yeah, this is the inverse VIX. You can actually buy it as a stock. So I would pay more attention to maybe here onwards. But going back to the VIX, you more want to play puts on the VIX because that is a little bit more sane. And if I were to, even make this a daily chart and scroll out, you could see how quickly it couldn't stay up there. And if I scroll out and scroll out, each one of these candles is a day, I'm pretty sure that, and there's my line up top, I'm pretty sure that by November or October, if not in 3 weeks, in 90 days, this, I'm 99% sure, will be back to between 12 and 14 again. You have people going on vacation right now, so there were so many external factors that pushed the VIX up, where I don't think it's it's just it's a correction in the market. Sometimes, sometimes people really.
Old perception doesn't always stay true. Think about when nowadays the market is much more surprising. You have Greece, and then next thing is you have China, and then the whole S&P market, the whole yen.
Mm-hmm.
It used to be that the Asian section are the most ranging, and suddenly the Asian section are much more volatile.
Mm-hmm.
You see more surprises in the market these days.
Mm-hmm. Well,
don't be surprised when the oil can go down a lot lower.
You can lessen that surprise by not being a complete analyst on these things, but just knowing certain irrefutable patterns, such as I know that the Bank of Japan, if I know the Bank of Japan is going to make a move, a fiscal or monetary move, and I could, when I show you that chart again of, USD JPY, hitting that level, it's sort of like an inevitability. I think it was here, definitely here, and again here, where the Bank of Japan has intervened. So they have a big, fiscal policy, or control over their fiscal. So, even if I were to draw a line down here, you could see it matches. This, is something where, you can play a lot of these things long term, but some of them work out short term. Just like a doctor, when you come in and say, well, when is my cough going to go away? He's going to say, well, do what I say and, take what I prescribe, and maybe in 3 to 5 days it should go away. If you ask your lawyer when your settlement's coming in, he'll say, well, if you do what I say and everything, paperwork, it may come in 3 to 5 weeks. I don't know when this will hit this line. And the Japanese yen will go down to here. But I'm pretty sure, and I have really nothing else to go on, but by the news and following it, I can say that probably with, I don't know, maybe, again, using the same example, 3 to 5 months. Within 3 to 5 candlesticks, it probably should come down to here. So, you give it your best guess. But some of these, is a little bit more certain, where, you can have a put on this and this really goes down. The other thing I wanted to show you was the oil. So we saw I'm sorry, let me make this a, okay, DBO, no, DBO, There we go. I'm sorry. Power shares, oil fund. Massive sell off of oil, and even going back to, it doesn't go back farther than 2012. Some of these ETFs, but nonetheless, this mirrors oil. If I were to bring up the same chart, that's 2010. I wonder if 2009. Yeah, it got to almost this level. But if I were to go even further back, you could see that sometimes it does, hang on to the 30s. And, it's one of those things where you look at any chart and say, man, I wish I could have caught it here, you know. And now we're at that point again. WTI crude, again, it keeps going down to about 36. So if you were to play that as a stock, and you can buy options on this thing too, if you were to zoom in on this, you could keep this indefinitely because there's no time running out on it. You buy it at $10. When I remember when this was at 15 or 16, that was when oil was $50. So do you believe that oil will, come back at some point to $50 a barrel? I mean, does that make sense?
Well, that I don't know.
I'm
not worried about too far.
Well,
I'm not worried about too far in the future.
I mean, if I had to say, it would let me try to rephrase. If I said oil would stay at 30 and never come back to 50 ever again, and this is where it would be. It would just stay right here. You'd probably disagree a little bit. There'd be some fluctuation, at least up to 50, and that would be representative. $50 a barrel, and that'd be representative right around here, 15 or 16. So you've already made 50% off of something that is sort of an inevitability, because even if Russia, China, Iraq, Iran, and OPEC and Saudi Arabia, even if the United States, gets all the shale in the world and does fracking and has all the electric power, that's all good. However, it's not going to power the manufacturing machine coming out of China. So they can cut supply really whenever they need to. So they can have, it's one of those geopolitical things where you can hang on to oil, and it's something that it's a safe way to play oil, is a good way of saying it. You can hold on to this. You can even play options on this. You can buy a 3-month option on it, and when oil starts to go up, so you can even buy the stock and you can get options, calls on it as it's going back up. Those are two things. Now, going back, when I when I look at, there are, if I were to look at,
I'm about to make a trade right now. You know what? I'm gonna make this trade.
I'm sorry?
I'm gonna make a trade right now.
You're making a trade right now?
I'm more in the yen long.
You're going the yen, which chart?
Yep, It is
Dollar
going
yen.
in my favor now.
Which which
Yep.
which one?
Dollar yen, dollar yen,
Dollar yen.
dollar yen.
Dollar yen. Okay, I didn't catch the dollar before it. So you're playing this
Yeah,
long, short?
long. Yep,
Long,
long, long,
long, long. Okay.
long.
Okay. Now you're gonna play this long. Uh, okay. Um, Let me ask you this question. Where's your take
I'm
profit?
going up 20. My take profit is the 120.09, I guess. Hold on.
Zero. Okay, so you're only in it
Oh
for.
man, it's working. Woo!
So yeah, I would say you're
Not
going.
yet.
Yeah, you might come into some resistance right now. Um, but yeah, that looks like a good play.
I have a long time before I could take profit. I have a long way to go, so
I think you could. Wait, you said that your take profit was 1.20 point what?
uh, 10 yeah,
Right here?
1201 and 104, yeah, 120.104.
10,
Maybe.
10. Okay, so
Yeah.
right around here,
I am going for it.
or you want to
Yeah.
catch it, or you want to catch it up. You want to try and catch it up here, or you want to just where did you get in? Maybe I should start with that.
Yep. Yep.
You got in around here,
I, I got in at 120.12.
120.12. Okay, so you could probably catch the top here because 1.20.99 is going to have some resistance to it psychologically. So, um,
Okay.
it may make sense to take profit and then to get back in if it does
Yeah.
open above that 50. Um, you play it on the 15, but
Yeah.
even on
I
the
took profit.
you already took profit. Good. So you kind of adapted a
I play
little.
on the 1 minute.
You were playing on the 1 minute. Good. So, um, this is one of those things where, um, you kind of, yeah, it was like adapting a little, a bit, like what I did. It was, kind of a short movement. And yeah, so that was really good. Uh, kind of did what I did, but the other one, just playing it long. Um, so
Actually, I might